Hey everyone, Randall here from Tax Samaritan. If you own a company outside the US, stick with me. Today I'll walk you through CFC tax, also called Subpart F, in the simplest way possible. This rule affects thousands of Americans who run or invest in foreign companies, and it can surprise people fast. Let's start with the big question. What counts as a CFC or controlled foreign corporation? You deal with a CFC when U.S. persons together hold over half the shares in a foreign company and at least one U.S. owner controls 10% or more. The U.S. tax code tracks these owners closely, even when the company sits in another country. Next, let's talk about Subpart F. This rule creates CFC tax. Subpart F lets the IRS tax U.S. owners right away on certain income inside the foreign company. You might not take any money out, you might leave the earnings in the company, but Subpart F still pulls your share into your U.S. tax return. Think of it like the IRS saying, you earned it, so you must report it now. Here's a quick real-life example. Mark, an American living in Canada, ran a small online shop through a Canadian company. He kept every dollar inside the business and never paid himself. Mark felt safe because he didn't touch the money. But the IRS checked ownership. Mark owned 100% of the company. His company counted as a CFC. Subpart F kicked in, and he owed U.S. tax on income he never pulled out. Mark panicked, but his mistake came from confusion, not bad intent. Once he filed Form 5471 and fixed his reports, he felt relief and moved forward. Subpart F income covers mainly passive income, things like interest, dividends, or rent. It also covers income that people often move from one country to another to hunt for lower taxes. If your company earns this type of income, the IRS wants you to report your share. If you're a U.S. citizen abroad and you own part of a foreign company, you can't avoid U.S. tax rules. Your company might sit in Canada, Mexico, the Philippines, anywhere. But your reporting still follows U.S. law, and CFC tax often surprises new expats. Form 5471 plays a huge role here. The IRS uses this form to track CFC owners and CFC income. Even 1 year without this form can trigger large penalties, so you want to handle it with care. At Tax Samaritan, our enrolled agents and CPAs handle CFC tax, Subpart F rules, and Form 5471 work every day. We guide expats with clear steps, we explain your choices, and we protect you from expensive mistakes. So here's your next step. Don't wait. Click the link below and request your free 30-minute call. Tell us about your company, your income, and your goals. We'll help you understand what you must report and what you can safely plan. If you own a foreign company, you never need to navigate CFC tax alone. Tap the link, book your call, and let's handle this the right way together.